Good morning, ladies and gentlemen. This is Greg Mikulowski from FXDD, and this is Thursday, March 25th, 2010, New York opening Forex report. Actually, this report is a little late this morning because of YouTube's outage. At least my outage seemed to be a local outage on YouTube, and this caused me the inability to post. So let me remind everybody before we get started that trading Forex is risky and should only be done with risk capital, not change your lifestyle. Traders could lose all their risk capital trading Forex. FSC doesn't guarantee any recommendations made within this commentary. Traders should make market assessments and take trading positions based on their own personal market analysis, risk tolerance, and financial condition. In addition, care should be made to only use leverage which is congruent with your personal risk tolerance. Although care was taken creating support, FXC does not guarantee the accuracy of the information. We did get some data out of the U.S. Here today. The initial claims came out at 442 versus 450. The continuing claims, however, were higher. They do some revisions this month, so it may have a little bit of effect. There's more and more chatter about next week's employment report, which is supposed to show upwards of 200,000 gain. There should be some effects from weather bounce back due to the blizzard. There also should be census workers. The government will release the amount of influence that the census workers did have on the effect next week. So it'll be or the effect on the report next week in the report. It will be interesting to see what kind of rebound we do get. So the market's going to be starting to prepare for that, and whether it's blizzard related or census workers or whatever, it's going to be considered. It's going to be a relief to see stronger data out of the U.S. In the meantime, the Eurozone is having their issues. Now, Trichet did increase the amount of emergency collateral rules past 2010, which was a little bit of relief for the euro, but it doesn't necessarily solve all the problems. Obviously, there's some issues within some of the countries. We saw Portugal credit rating be reduced yesterday. Of course, we have the Greece situation, Spain, so on and so forth. And all of this requires pullback in spending, likely within the consumers, and increased taxes, taking money away to get their debt back in order. So that is a drag on the economy, and may indeed continue to be the catalyst for continued pressure in the euro. We will see. Obviously, we saw the euro break out yesterday to the downside, getting below these lows that we see right here at 134.37 to 51 area, and that caused a break to the downside here. We will see how it all pans out from a technical perspective on the daily chart. This could see the market head down toward the 129, 128 type area on the bottom end of this channel from a daily perspective. That's a long way off because we like to keep things a little bit more current here, especially in the world of retail foreign exchange. So taking a look at the hourly chart, you can see how the price is well below the 100-hour moving average, and has been well below the 100-hour moving average since this point right here. The market broke at 137.29 below that 100-hour moving average, paused at the 200-bar moving average, and then started to move down. We have one little consolidation slash allow the moving average to catch up with the price. That's typical in the market. Then continued its trek to the downside, breaking through our key low levels, including 134.28, which off the daily chart, 134.28 was a 61.8% retracement of the move up from the 2009 low to the 2009 high. That's this move from here to here, and that 61.8%, 134.82, helped pave the way, getting through 134.36, 37, and that caused the sell-off to the downside. So from this hourly chart, what I would do is put a line at 134.36. Probably take this line out right here. Put it in 134.36 or 37. That was the actual low. And that would be our, perhaps a target resistance level on the top side. Another level would be the high off of this corrected move at 133.77 for the currency pair. Let's go to the 5-minute chart, and the 5-minute chart is showing us that the market broke above and started this corrective phase above the 100 and 200 bar moving average. You can see here how yesterday the market held that level like a charm on a number of different occasions. The market came up, corrected against 100. Correct. This is normally what happens in a trending market, folks. the market uses a 100-bar moving average as a resistance level, and then eventually the market finds a bottom and then starts to consolidate during this period right here. So really this whole thing is a consolidation phase, corrective type phase for the currency, and the resistance comes up at the 133.92 level. That's the 38.2% retracement of this move to the downside. Again, 134.37. That's kind of like we can't get above that level if the market is going to continue to trend to the downside for the euro versus US dollar. But so far the market correction hasn't gotten approached this 133.92 level. We only got up to around a 72 here. So the bias to the downside remains. We may continue on a sideways trajectory today, but certainly not all that great as far as the technical goes. In the UK, they had better retail sales coming out of the UK, and that helped force the sterling to the upside. But where did we go? We went right up to the 100-hour moving average. That 100-hour moving average comes in at 150.08. The high came at 150.011, and the market quickly sold off from that level. You can see we're well but down, testing this 30-ish type level down. Currently price trading around 149.34, and so that is significant. That is a significant test of that moving average. That is a significant hold of that moving average. It also corresponds with this trend line here. If you take the low going back to this day and the low going back to this day, extend that line up. We did have a little break below here, but that was quickly reversed. Then we started to use that as support. We use it as support here. We use it as support here. Market had this little rejection here, and it started to move down. Came back up to this line. Came up to the 100-bar moving average and held it. That's a good sign from a technical perspective. We'll be watching that 100-hour moving average on the top side and this trend line, old trend line, to the bottom side of the trend line, as I like to call it, to contain the upside for the sterling versus US dollar. And you can see the quick rejection of that off the 5-minute chart. Look at this bar. It went flying up and then came flying down. Only got up to 149.80 after that level. So that's a worry to the downside. Now in the correction of the move to the upside came down to 61.8 of that move from this low to this high, and that comes at 149.13. So we are finding support there, and we are back above the 100-bar moving average on this 5-minute chart, which currently comes about the 149.20, 24 type area. So we'll be watching that level on the downside. If we're able to get through that level, look for we're going to have to get through the 200-bar at 149.05 to confirm the movement to the downside for that currency pair. Let's go to the dollar versus yen. The dollar versus yen broke above the 200-day moving average, which is currently coming in at 91.55 here today. The low for the day came in at 91.75. That's bullish. Usually when this is the first time the market's been above that 200-day moving average since going back to August of 2009. So it's been quite some time, and that is significant. We should see continued movement to the upside in the dollar versus yen, and there is some talk about perhaps hedgers taking off their bets as far as the dollar versus yen, and that may push that currency pair to the upside. Finally, all this started when the two moving averages and the price converged down here at the bottom in this non-trending range. We got through this key 90.72 level, and that forced the market to the upside during this period right here. This 91.55, put a line in there on your hourly chart. That's a key level. That's a 200-day moving average. We got to stay above that level in order to keep the bullish bias for the dollar versus yen. Taking a look at the 5-minute chart. We are above the 100 and 200 bar moving average here. Again, this in the New York session, after coming down, testing it in the early New York session, now moving back to the upside. That's positive. That's positive for the currency pair. We should see further upside. We do have the high yesterday at 192.39 to get through. The close from yesterday came in at the 92.28, so that's also going to be resistance on the top side here today in the New York session. The dollar Canada coming down, testing the 100-hour moving average after holding it. You see how it held the 100-hour moving average here and used it as a springboard to the upside yesterday. Now we're coming back, testing that 100-hour moving average. We're going to have to get above the 102.41 level. That was the old high for the week in order to propel the market back to the upside. So currently the price trading at 101.93. We're closer to that 100-bar moving average. We're going to have to hold that level in order to see further moves to the upside. Watch that level. If we go below it, below the 100-bar moving average, we should see the market start to come down with a test of this 200-hour moving average as a key level on the downside. Finally, we'll take a look at the dollar versus Swiss. This Currency pair saw good gains yesterday, breaking above the 100 and the 200 bar moving average, which converged with the price here. That gave the market the impetus to move to the upside, as did all the other bullish news out of the U.S. But that was a nice little technical clue for technical traders to grab hold on. The correction did take the market up to the 61.8% retracement. That's going to be a key level here on the top side for this currency pair in New York session here today, 107.41 and going forward. So we got to get through that 107.41 level. And what is that? The 61.8% retracement of this move down from the March 2nd high. That's the March high to the March low. 61.8 is 107.41. Get above that level, and we continue the trend to the upside for the dollar versus Swiss on a daily chart. You can see how the market did come down a few weeks ago, tested the 200-day moving average and moved higher. On the 5-minute chart, we are seeing resistance against the 100-bar moving average. We have seen it resistance, 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 resistance. We've got to get above this level at 107.04 on the dollar versus Swiss. That's my report today. Have a good day. Bye.